MCQ questions will now consider in this lecture. Which statement is correct? Okay. The accountant prepares a trial balance and the bookkeeper prepares financial statement. No, bookkeeper only prepares the first level and accountant finalizes it. Financial statements are usually prepared by accountant. Accountant is a broader term than the bookkeeper. So this is not the correct answer. Accountant writes up the journals and bookkeeper writes up the ledger. No. Journal and ledger both are written by the bookkeeper only. Bookkeeper writes up the journal and accountant prepares a trial balance. No. Up to the preparation of the trial balance, it's in the hands of the bookkeeper only. Clear? Bookkeeper writes up to the ledger accounts. Okay, even trial balance also. And then accountant prepares financial statement. This will be the most suitable one. So D is the correct answer here. Question number 2. Which formulas may be used for the accounting equation? Asset is equal to owner's equity minus liabilities. No, you have to add these two to get, so this is not the correct answer. Liability is equal to the assets minus owner's equity. This one is correct. Owner's equity is equal to asset plus liabilities. No, asset minus liabilities is the correct one, so it is also wrong. Owner's equity plus liability is equal to the asset, so this one also be correct. Second and fourth both are being correct one only. In choices, C is the correct one because it shows that 2 and 4 being correct, right? What increases owner's capital? What increases owner's capital? Bank loan extended from 5 to 10 years. No. Loan is not part of owner's capital. Okay. So, capital plus loan is equal to asset. Otherwise, capital is equal to asset minus liabilities. If the asset increases or liability decreases, automatically increases the capital. Is that okay? That's a simple logic. Purchase of inventory on credit. Purchase of inventory on credit. Credit is nothing but creditor. Inventory is the stock. Asset also increases. Liabilities also increases. Ultimately, there will not be any change in the capital. Also not correct. Purchase of machinery by check. Asset also increases. Bank decreases. Asset increases, another asset, bank asset is decreasing. So neutralized, there will not be change in the capital. Transfer of vehicle to business from private use. Okay. Privately used asset is transferred for the business use. Then it is nothing but vehicle debit to capital. Because of transferring his personal vehicle, vehicle is increasing asset. Simultaneously, capital is also increasing. So D is the correct answer. Is that clear? Now, which statements about bookkeeping and accounting are correct? Bookkeeping and accounting. Accounting is performed periodically rather than daily. Yeah, accounting, yes. The trial balance is prepared once in every 3 months or once in a year. The statement is correct. Okay. Accounting relies on having accurate bookkeeping records. Yes, you can prepare the accounting, means the financial statement, only if the bookkeeping records are perfect. So this one also true. So once the ledger preparation also be done perfectly, we can prepare the financial statements easily from there. Bookkeeping includes preparation of financial statements. So bookkeeping will not include. So this is not correct. Bookkeeping involves recording of financial transactions. Yes, of course, you have to record the financial transactions in journal form as well as subsidiary and ledger, all these things. So 1, 2, 4 are correct. So 1, 2, 4 are correct in choice number A. So that will be chosen here. Is that clear? Question number 5. Business employs a bookkeeper and an accountant. You know that accountant is for preparation of financial statement. Bookkeeper is for passing the journal entry as well as posting that into the ledger. Which task would the accountant perform? Extracting balances from the ledger accounts to produce trial balance. Even the trial balance also summary may be in the hands of the bookkeeper itself. Okay, so not correct one. Making entries in the general ledger to adjust the provisions for doubtful debts. B. Okay. Also be there, if there is any error and it's nothing but posting in the general ledger, also be in the hands of the bookkeeper, not in the hands of the accountant. Preparing monthly report that analyzes the profitability of the company. Definitely profitability is identified based on the gross margin percentage or profit percentage and all ratios. These are the expertise requirement, and debut means relied on accountant, so this will be correct one. Recording sales and purchases invoice in the book of prime entry. Prime entry is always done by the bookkeeper, not by the accountant. So C is the correct answer. Is that clear? Now, what are assets? What are assets? Amounts owed to the business. Amount owed to the business. If amount owed to a business means it's amount recoverable by the business people, and definitely it's an asset. Amount owed by the business. If the business is owing, then it's a liability for the business. And items owed by a business, items owned. So if I own an asset, okay, then it's coming under asset. Asset, liability, and asset. So asset, yes. Liability, is it an asset? No. Okay. What are asset? This is asset. This is liability, so not an asset. This is asset, yes. So C is the correct answer. C is the correct answer. Now, which transaction will increase both assets and capital by the same amount? Assets and capital by the same amount. Okay. Credit customer settled his account after deducting cash discount. You just think about journal entry here. Credit customer settled his account. Then you will be getting bank and creditor. It will not have, yeah, of course, asset, but it will not have the capital. So it will not have any impact over there. So it is not the correct answer. Goods were sold for cash at a price higher than their cost price. 100 rupees goods, by adding 20 rupees profit, sold for 120. What does it mean? The profit included in the sale price, usually it is meant for the owner. If it is meant for the owner, it will be part of capital. This will increase the capital. So B is the correct answer. And you will just go and check the next two more just choices we have been given. Rent received included in an amount prepaid for the next accounting period. Prepaid. No way it is connected with the capital, right? So rent received. If the amount received included an amount prepaid, if I receive the money in advance, then it's my liability, not the capital. Okay, not the correct answer. Owners repaid a business loan from his personal bank account. Okay, personal bank account. If the loan is paid, then what is journal entry here? Okay, loan is repaid, debited, and owners repaid a business loan from his personal. So then it will be capital. Okay, it will be capital. Now, so here also capital increases, but what's the question? The transaction will increase both assets and capital in the same amount. Then this seems to be predominantly correct. In your balance sheet, you just think over in your balance sheet. Okay, financial statement. Okay, financial position statement. Because of this transaction, capital account and asset account, asset account, and then I can name this being, rather than asset, I name this being stock account, bank account. Okay. C, the capital being 500 rupees, stock being 300 rupees, bank being 200. That's how you can imagine. Okay. In the capital and liabilities also 500. In the asset side, stock and bank also 500. If this transaction involves goods were sold for cash at a price higher than them, so I'm going to incorporate this one. Because of the sales, stock will decrease by 100. So automatically it becomes 200. Bank will increase by the amount we receive here. 200 plus 120, 320. And because of this transaction, that's a result, positive result. that will be added to the owner's capital. So it becomes 520. Now the total of capital being 520, total of assets being 520. So asset also increases by 20 and capital also increases by 20. This will be most suitable for this question. Assets and capital increase by the same amount. Yes, asset also increases by 20 and capital also increases by 20 because of that. So B is the right one. Here also capital is increasing. But the question is, will it be the same amount? In your financial position statement, assume that capital being 400 and your loan being 200 rupees, total 600 rupees. Similarly, in your asset side, you have 600 rupees. Now imagine that a loan of rupees 150 paid out of a personal bank account 150. The amount brought in from the personal account will be credited to the capital account and it will reduce the loan amount. So after this, the capital will be increasing from 400 to 550 and loan 200 after 150 amount payment, it becomes only 50 rupees. So 600 rupees will be the value here and here also 600. Of course, capital increases, but there is no change in the asset. So, and analyzing in detail, we came to know that B is the superior choice because assets and capital will increase by the same amount. Then B is the chosen one. Is that clear? You can think over with a small illustration so that you will be you are able to be you are able to guess this properly. How does a trader use the information provided by financial statements? Information provided in the financial statement, how the trader is using it. Probably he can use it for calculating the profit and loss, how much he earned and all. Okay, calculate the amount of cash drawings taken. No. By preparing the financial statement, what happens? So you will prepare income statement, financial position statement. Okay, in your income statement you will be able to find out what about your profit for the year as well as what about the impact in your capital and all. So profit is a predominant nature. We never bother about the drawings taken or not by preparing this one. That's already known. Calculate the amount that is owed by the trade receivables also be not very important in financial statement preparation. Okay, to check the balance shown on bank statement, no, it is coming under bank reconciliation statement and comparing the cash book. Compare the business performance over the number of years. That is very, very important. Today's profit is 100, to yesterday's profit is 80. Then it gives an indication that this year you are earning better than the previous year. So because of that reason only the financial statements are used by the trader. So D seems to be superior choice among the four choices. We have to choose this one, right? And ninth one. Which statements about trade discount are correct? Trade discount should always be not recorded. It is debited to the supplier account. No, it is not going to be shown anywhere. It is only given if the invoice is paid within the period allowed by the supplier. No, it is a cash discount. If the payment is made within the stipulated date, you will be getting one discount. That discount is called cash discount. So here we never bother about that one here. It is shown as a deduction from the price of the goods on invoice. Invoice itself while posting, that trade discount is deductible. So correct one. It is used to encourage bulk buying. Why we offer the trade discount? So we encourage the buyers to buy more rather than purchasing one quantity. If we purchases two quantities, we offer 20% discount. So this trade discount always motivates the buyers to buy more. So this is also true. So 3 and 4 both will be true. Then D is the correct choice. D will be the correct choice. Is that okay? Now, next, which task would be carried out by bookkeeper? Already we have seen up to the recording. Okay, prime entries are going to be posted here. Comparison financial statements between the years. No, it's accountant job. Preparation of financial statement, accountant job, and decision making will be coming only after financial statement also be in the hands of the accountant. Recording the financial transaction in journal entries as well as subsidiary books will be the predominant one. So D is the correct one. What is the accounting equation? Asset is equal to capital minus liability. No, it's plus liabilities. Asset is equal to liabilities plus capital is correct. Assets minus liabilities is capital. So C is the correct one. Okay. C is the correct one. Asset plus capital is equal to liabilities also. No. Assets minus capital is the liability. Okay. Now, 12th one. 12th one. What is prepared by bookkeeper? Already we studied. Okay. Income statement, no. Financial position statement, no. Appropriation account in partnership. The profit is appropriated to the partners, also be done only by the accountant. Only the cash book. Okay. Subsidiary book. Cash book is a subsidiary book, and journal entry and ledger posting up to that point, bookkeeper will come. So B is the correct one. Which item is an asset? Which item is an asset? An amount owing by credit customer. Credit customer, if they owe to us, okay, which item? The amount owing by credit customer, an asset. Okay, he has to give to us. Then I am very happy that we'll get collections the later period. It's an asset. The amount owing to credit suppliers, the liability. Interest accrued on bank loan. For the bank loan, interest accrued means we supposed to pay. We still liable to pay it, not paid. So it will be a liability. Rent received in advance. Any income received in advance also be a liability. So A is the correct one. A is the correct one. Now, which action does not reduce owner's liability? Business expenses paid using personal check. Personal check, okay. So in this case, expenses debit, capital is credit. Definitely, capital is now increasing. Capital is increasing. In this case, cash withdrawn from the business bank account for personal use. Drawings reduces the capital balance. Is that okay? And goods taken from inventory for personal use also be a drawing, so it also reduces. Personal expenses paid by business cash, personal expenses also be drawings. The last three are being the drawings, so all the drawings will reduce the owner's capital. But here, which action not reduce? Then A is the correct one. A is the correct one. Is that okay? Then Farooq sells goods on credit. A check from Khalid, a credit customer, was dishonored by the bank. Okay. A check from Khalid. Okay. A credit customer was dishonored by the bank. How should Farooq record this item? So when you receive the check from Khalid, then it is bank to Khalid, right? Bank account debit and Khalid account being credit. But here on dishonor, it should be reversed. Khalid and bank. Khalid should be debited and bank should be credited. Okay. So account to be debited being Khalid and account to be credited being bank. C is the correct one. C is the correct one. Is that clear? Now, which actions are examples of bookkeeping? Bookkeeping. Forget about the income statement and financial statement. So rest will be coming in the hands of the bookkeeping. Entering details of a check received from the customer in the cash book. Cash book is maintained by the bookkeeper. Will be a part of bookkeeper's job. And entering details of goods purchased on credit in the purchases journal. Yeah, purchases journal also primary entry only. So it should be done by the bookkeeper. And producing an income statement to calculate the profit for the year, it's an accountant job. Recording details of credit sales in the account of credit customer. Recording details of credit sales. Okay, in the account of credit customer. Of course, it's a ledger posting. Also be done by the bookkeeper. So 1, 2, 4. B is the correct answer. B is the correct answer. Is that clear? And 15th. What is the main function of bookkeeping? What is the main function of bookkeeping? Already we studied. Bookkeeping is to record the basic ideas, right? Communicating information, no. Interpreting information, no. Recording information is the primary job done by the bookkeeper. See, from the transaction, you post that in the journal, subsidiary books and etc. And from there, you post that in the ledger. After that, you will go for the trial balance, and from the trial balance, you will prepare final accounts, income statement as well as financial position statement. Okay, these three part are the primary done by the bookkeeper. Okay, it's only recording the information. Once you prepare the financial statement, okay, income statement and financial position statement, this information will help the others to know what about the business performance. If the profit is increasing comparatively previous year, it communicates that this business is doing well. So communication. And if the business gives you 20% margin And if you are going and verifying whether the profitability of the other company, it goes, it shows 30% gross profit margin, you will understand that your business is performing lesser. So comparability also based on the analysis and interpretation, that will also be accountant expert's job, not the bookkeeper job. Summarizing information is nothing but trial balance. All the information summarizing and summarizing whether the business is doing well, liquidity positions also doing well. All these things are summarizing. Also be not for part of bookkeeper. Now, what is the purpose of accounting? What is the purpose of accounting? To enter each business transaction twice in the books of account. No, recording twice is a double entry system. Double entry system. Whether you follow single entry system or double entry system, both are being accounting only. So it is not the correct answer. To prepare financial statements and provide information for the decision maker. This is correct. To prove that the total of the debit entries equals to the total of credit entries. No, that's only for cross verification whether you have posted everything perfectly or not. So it is not our intention. Accounting intention is to find out what is the profit, and you have to intimate this profitability to your boss or decision maker. To provide financial information for the business bank manager. To provide no, it's not only business bank manager, it's for all the information related. So among the three, B and D seems to be better, but B is superior. B is superior one. It's a common. Now, 19th. What is the purpose of measuring business profit and loss? Why do I want to measure the profit and loss? Very much important for understanding the business is doing well or not. Check the productivity of the employees. No, productivity of employees means you have to compare the employees with the output generated. It is not due to the preparation of profit or loss. Okay. To consider the ability of business to grow. No, growth is not directly linked with your profit and loss. Okay. Sometimes you don't get the profit, expecting the business will grow in the future. So profit and loss will not communicate its growth. Determine how much cash is available. How much cash is available. Okay. So if more profit is there, you will be able to understand that we have more cash. Okay. This may be a reason, but anyhow, we'll just go and cross check. So first two are not correct. This one may be correct. Anyhow, we have to cross verify with the fourth one. To ensure that the inventory is not overstated, whether you overstate or understate, it's not a item of profit or loss disclosure, right? So only we will not be able to identify whether the inventory is shown properly or not by preparing the trading and P&L account or in the trading section as profit and loss section. Only how much we earned because of that will be most superior. So C will be chosen. C will be the chosen answer here. Now 20. At the end of first year of trading, Joe had $6,500 in her business bank account. Then she paid 5,000 of her own money into the business bank account. Okay, so again she has invested this one. Okay, it's a capital. She used $2,000 of this amount to repay business loan. Okay, so what happens? What effect would these transactions have on assets and capital and liabilities? See, capital and loan and asset, especially bank. Initially, 6,500 being in the bank account. We assume that we have only this much amount. Okay. We assume out of 6,500, 3,000 being capital, 3,500 being the loan, like we can assume. It's only assumption because she used $2,000 of his amount to repay the business loan. Means the business loan could be more than 2,000 or exactly 2,000. That's how we can assume. Okay, that's how we can assume. Okay, 2,000 and 4,500. Now, first one, she paid 5,000 of her own money into the business account. Because of that, it's a capital introduction. So you have to add that 5,000 here as well as it will give a rise to bank balance. And she used $2,000 of this amount to repay the business loan. So here you have to subtract 2,000 rupees. And as we know, loan is subtracted, and this will be out of your bank balance you have. What effect would these transactions have on assets? Okay, assets, capital, and liabilities. Now, ultimately, compared to the earlier one, capital increases by 5,000. So 5,000 increases. So this one also right, this one also right. And loan decreases by 2,000. So this one is correct. Okay. And bank balance increases by 3,000, right? 5,000 increases, 2,000 decreases, ultimately increase being 3,000. 3,000 increase in assets. So this one also correct. Okay. All the three will be correct in choice B. So B is chosen here. Is that clear? Clear? Now, what's the ultimate impact here? You think over here. I imagine that. So the 5,000 being the further capital introduced by the owner. So capital increases, bank balance increases after this transaction. This is the transaction number one. Transaction number two, she used 2,000 of this amount to repay the business loan. So business loan is repaid. So loan is decreasing by 2,000 as well as bank balance also decreases by 2,000. This is the transaction one. This is the transaction two. Now you have to find out the impact due to these two transactions. Due to these two transactions, capital increases by 5,000. Capital increases by 5,000. So here, capital increases by 5,000 means this one also correct, this one also correct. And in case of loan, due to these two transactions, 2,000 loan is decreasing. Loan is decreasing. So liability decreasing will be this one is correct. And in case of bank, 5,000 increases, 2,000 decreases, ultimately 3,000 rupees increasing in the case of bank. And that will be true here as well as here, no problem. But anyhow, all the three should be matching. Then B is the correct answer here because asset also increasing, capital also increasing, liability is decreasing. Is that clear? Now, which task is performed by bookkeeper? Already we have seen. Analyzing accounting ratio, no. Interpreting the income statement, no. Posting entries. Posting entries is the job of bookkeeper. Preparing statement of financial position also, accountant's job. Okay. Which statement is correct? Accounting involves measuring profit and losses. Of course, correct. Accounting is the recording of financial transaction. That's a bookkeeping item. Okay, it's not accounting item, but bookkeeping is a part of accounting only. But when we start talk about accounting, it includes financial statement preparation also, not only recording. Not only recording. Only recording means bookkeeping. Bookkeeping involves communicating. No, communication is only after the preparation of the financial statement. Bookkeeping requires the use of ratio analysis. No. So among the four, A will be the most suitable answer here. Now, Ricardo left the job as machine operator. He was a machine operator earlier. Now he left the job to start his own manufacturing business. Why was he interested in his financial statement at the end of the year of the business? So why is interested to know what is the profit he earned? That's all. That's the predominant thing, right? Let's see. To ascertain the market value of the non-current assets, no. Check all the transaction had been recorded, no. To find out about job satisfaction among the workers, no. To see the profit was greater than his previous earning. That's the intention. So profitability is the main intention of preparing the final accounts or financial statements, right? Now, how is owner's equity calculated? Owner's equity calculated. Total asset minus total liabilities. So asset is equal to total, capital is equal to total assets minus total liabilities, also correct, 24. This one is correct. Total assets plus total liabilities, no. Current assets minus current liabilities, also not correct. Current assets minus non-current liabilities, also not correct. So owner's equity is nothing but assets minus liabilities only, no. So statement, the choice A is correct. You no need to go further here. And next, a business employs a bookkeeper and an accountant. Okay. Which task does the accountant perform? Accountant's job. After the preparation of a ledger posting by bookkeeper, accountant's job will come. Extracting balances from the ledger accounts to produce trial balance. Trial balance also most probably done by the bookkeeper only. Making journal entry to record the credit sales of non-current assets. Okay, no, the journal entries also be in the hands of the bookkeeper only. Right. preparing monthly report that analyzes profitability of the company. Definitely it's in the hands of the accountant. It is in the hands of the accountant. Recording sales and purchases involves invoices in the book of prime entry. No, prime entry also in the hands of the bookkeeper. So these two are not in the hands of the accountant. Okay. See, journal entry, subsidiary books, ledger preparation, and trial balance. Up to this part will be done by bookkeeper. That's how you can understand very easily. Okay. Next question. The transaction has had the following assets. Asset decreases and liability decreases, capital increases. Okay, the business is not overdrawn at the bank. Okay, there is no overdrawn balance in the bank, means positive balance you have. Which transaction happened? A payment was made to credit supplier after taking cash discount. Okay, after taking cash discount. So what's the journal entry here? Here, supplier account debit and discount received, and then bank, and then bank. So asset, in this case, asset decreases, correct? Discount received is an income for the owner, so capital increases, and supplier is a liability, that also decreases. So A is the correct one only. Anyhow, we have to cross check with others also. Clear? So whenever you supposed to face an answer for these types of questions, imagine yourself some journal entry as well as in ledger posting like, and guess easily. So here what happens? Supplier is a liability, decreases, correct? Discount received is an income. The income is only for the owner, so it is part of owner's item. That too it increases. Bank is actually debit balance. If it is being the credit side, it will be decreasing. So A is the correct one. Cross verify. A payment was received from credit customer after allowing a cash discount. Okay, payment was received. So in this case, bank account, discount allowed account also debit, and customer trade receivables or customer account is credit. Here, discount allowed is a nominal account. As it is being the debit, capital account decreases. Here, capital account increases, so it is not the correct choice. It is not the correct choice. Goods were sold to credit customer for less than their cost price. Goods were sold. Cost price being 100, because of some reason there may be damage in the goods. So we might have sold it for 80. Then in this case, customer, so customer account debit 80 rupees, and sales account credit 100, but you offer 20 rupees lesser value, then it is a loss on sale. The loss is always decreases the capital, so it is also be not correct one. So capital should be increasing. So here in this case, capital is decreasing because of sale in loss. Goods were sold to credit customer for more than their cost price. Goods were sold to credit customer for more than their cost price. So in this case, the journal entry being customer account debit and customer account debit to sales or sales. Okay, sales 120. The cost being 100, but by adding 20 rupees, you will sell it at 120. You sell at 120. Sales is 120 and customer also 120. Customer is an asset. So customer asset is increasing, right? Customer being the asset. Customer is increasing because of the sales. But here customer being the asset decreases, that statement says this is not the correct one. This is not the correct one. Clear? 27th. Hassan is a trader. During the financial year, he took goods from the business for his own use. How should he record this? Okay, during the financial year, he took goods from the business for his own use. Then drawings. Drawings should be debited and purchases should be credited. So B is the correct one. B is the correct one. Don't say inventory. In transaction, we don't use the term inventory. Predominantly, that inventory on sale will be named as sales. On purchase, it will be named as purchases. Right. 28. Why does a trader calculate the profit of his business? Why? That's the intention. To calculate the interest payable and loan, no. To calculate the provisions for doubtful debts, no. To know the total expenses of the business, also no. to know whether drawings are at reasonable. If the business is not making any profit, what's the use at all? What's the logic behind drawings? Okay, if the business gives you more profit, then it's logically helps the owners to draw more for his personal purpose. So D may be correct answer here. Clear? Now, goods purchased on credit from Jamir were written by Ashwin. Okay. One second. Now, goods purchased on credit from Jamir were written to Ashwin. Which entry should Zamir make to record this? So, what is the journal entry for this? Correct entry for this being goods purchased on credit. Okay, purchases debit and Jamir credit. Okay, actually it's not purchases which was returned by Ashwin. Okay, this is the wrong entry. What is the correct entry? As the goods returned by Ashwin, it's a sales return. It's a sales return. Ashwin. Okay, this is the correct one. Clear. Now, which entries should Jamir make to record this? So, which entry should Jamir make? This is the correct entry should have to be made, right? So, sales return should be in the debit side and Ashwin should be credited. That will be the correct one. Okay, this will be the correct one. Goods purchased on credit from Jamir. Okay. So, but originally we returned by Ashwin means it's a sales return. Is that clear? You have to pass it sales return. So it is not wrong entry. Let me explain in a detailed manner. Goods purchased on credit from Jamir. So it is all about Ashwin and Jamir. So Ashwin purchases the goods from Jamir and were returned by Ashwin to Jamir later on. It's all about sales return for Jamir. Though it may be the purchases and purchase return for Ashwin, for Jamir, it's a sales return. You have to pass the sales return entry. Okay. Yeah, more logical entry. Okay. Call a trader took goods from the business for his own use. Then it's all about drawings. These goods had cost 100 and $8 carriage had been paid for them to be delivered to the business. So actually the goods cost will be value at which the drawings amount will be recorded. How would this be recorded in costs account? Always once the goods purchased, the cost being inclusive of the carriage inwards. So 108 will be the correct value. Okay. So how would this be recorded in calls account in the books of the business? So here drawings account, debit and um, purchase account credit. Okay. So debit calls drawings account 108 is the correct one. D is the correct one. What does this sales ledger of the business contain? Only credit sales, sales ledger. Okay, sales ledger, let's see. Of the business contain. Accounts of trade receivables. Sales ledger means it's only receivable, right? No, it's not sales account, sales ledger control account, not trade payables. It contains only the trade receivables, right? 30th, 32nd question. Abdul buys his machinery on credit. He provided the following information: machinery at cost in the beginning and end, amounts owing to the supplier of machinery being 19,000. During the year, Abdul paid 25,000 to the supplier of his machinery. How much did he owe them on 30th April 2021? Is that okay? Now, machinery increases by 12,000 rupees, right? Increases by 12,000. What does it mean? Amount owing to supplier being 19,000, and this year we purchased another additional 12,000 rupees machine. For that also we supposed to pay another 12,000. Naturally, the amount payable to them being 31,000. But in this current year, the payment made to them being 25,000. After subtracting 25,000 rupees, still how much money we supposed to pay here? 6,000. 6,000. Is that okay? So A is the correct one. 15th February, Kalu made the following entries in his accounts. Okay. Bank, debit side, bank and discount allowed. Okay. And credit side, Drubha. Okay. Okay. This is how the record is done. This is the overall amount, but this is the amount we collected, and 12 rupees being the discount allowed. Which transaction was being recorded? Okay. D paid K by check after taking a cash discount. Okay. Who paid this money? K has recorded this one, made the following entries. Okay. K. Then money is received from D, bank, discount allowed, and D account. Is that okay? So in the books of K, it is received. It is received. Okay. So D paid K by check after taking a cash discount. Yeah, of course, this seems to be correct one only. So 240 is the original amount payable. 228 is paid after a discount 12. So A is the correct one. D paid K by check after taking a trade note. It's not trade discount. It's all about payment. No, in case of payment, it is only cash discount. On purchase itself, because of high purchase or motivating the buyers to buy more, a discount is offered, which is called trade discount, which is not going to be part of your transaction value. Okay. K paid D. It is not payment made by K, so it is also not correct. K paid D also be not correct. Only D paid, that too after the cash discount. So A is the correct answer. Joy is a manufacturer. On 1st February, he purchased a machine costing $15,000 from Vinitha. He paid $10,000 immediately with a check from his personal bank account. The balance was to be paid in June. Okay. Which entries did Joy make? So for the purchase of machine debit, and payment is made by the owner out of her personal money, then it's a capital. Okay, 15,000, 10,000. Balance 5,000 is payable later on, means supplier amount. That will be the supplier's name. Okay, Vinitha. This will be Vinitha. Okay. Now accounts debited. Machinery account debited 15,000 is the correct one. So this one also correct. This one also correct. And capital account should be credited. So it is not correct, and this one is correct. So D is the correct one to be chosen. Is that clear? 34. Jamil's financial year. Jamil's financial year ends on 31st December. On 1st February 21, he brought down a debit balance on his stationery account. Okay. What does this balance represent? Okay. Stationery account means opening stock. There will be opening stock of stationery. Okay. Amount owing for stationery, no. Amount paid for stationery also. Amount paid for stationery during 2020, also not correct. Cost of stationery used, no. Inventory, that's the correct one. Stock is the correct one. Is that okay? Daksha returned goods to Amina. Which entries did Daksha? So it's what about Daksha's book? She returned means it's a purchase return. So purchase return. So Amina and purchase return will be the correct entry. Okay, purchase return will be the correct entry. Okay, debit entry being Amina and credit being purchase return. Okay, and this is a special ledger, purchases ledger. Okay, and purchases return, and this will be the general return, general ledger. Is that clear? We have purchase ledger as well as sales ledger, right? As we made a purchase, might have been posted in the purchases book. On return, it will be adjusted only in the purchases ledger book. Okay, it's not general ledger. Okay, so Amina debit is correct, purchase return credit is correct. But whether it is in which account, which ledger account will be the matter. In case of purchase return, it will affect only purchases ledger. Okay, was already posted only in the purchases ledger book. So now I'm returning that same. But purchase return is a general ledger account. So it comprises, general ledger has all other ledgers other than the purchases and sales. Okay, that's why it is called general ledger. Okay, so it will be in general and it will be in the purchases ledger. 37. 37. On 1st June 2021, Shu's capital account had a credit balance of $120,000. Okay, credit balance. During the year ended 31st May 2022, she withdrew goods costing 1800 and the loss being 14,200. I have to subtract these two. So to this extent, the capital will be decreasing. 14, 15, 16. So 114, 104 will be the correct answer, I think. Okay, A is the correct one. So in case of loss, this will reduce the balance, and in case of drawings also reduces the capital balance. So the ultimate value being 1,04,000. Bilal purchased goods on credit from Ashim. Okay, where should Ashim record? So in Asim's book, Bilal purchased goods on credit from Asim means for him it's a sales. It's all about sales. Then the journal entry being what? Bilal account debit, sales account credit. Okay, Bilal. On credit means in the sales ledger, you have to post this as Bilal. Is that clear? Bilal. Okay. Now, sales ledger is correct. And another one being it is a nominal ledger. It's a nominal ledger. You can post that in the general ledger. Is that clear? Not in the cash book because it's a credit transaction. Not being the purchase ledger. Definitely 2 and 4 will be the correct answer. So D is the correct one. D is the correct one. Clear? Next. So this will be sales ledger. This will be general ledger. Okay. Sarah sold goods on credit to Jafar. How was this recorded in Sarah's ledger? In Sarah's ledger, the journal entry being sales only, no, Jafar and sales. Jafar and sales. Jafar should be in debit. Okay. That too, this is general ledger. This will be sales ledger. In general ledger, Jafar should be debited. Okay. General ledger, Jafar should be debited. Then this one is correct. In sales, sales will be in credit. Okay. So D is the correct one. Okay. One second. Okay. Jafar account is okay. Okay. So you just think over this way. In your sales ledger, how do you record? Jaffer. Is that okay? So Jaffer will be posted in the debit side of the sales ledger. So A is the correct one. And sales should be in the credit side of the general ledger. Okay. How do you post in sales ledger? Whatever the amount you posted here will go to where? Sales account as well as Jaffer account. You can imagine this way. The total will go to the sales. Okay, sales account. Okay, in the credit side. In the credit side. Sales. In Jaffer, this will go to the credit side as sales. Is that okay? So in this general ledger, sales will be in the credit side, and in the sales ledger, it should be in the debit. That's how you can think over. Okay. Omar sent a credit note to Mariam for goods return. How would Mariam record this transaction? Okay. Now, credit note means Mariam is going to be credited. In Mariam, it seems to be debit note like. Debit note like. Okay. Omar is going to be debited. Omar is going to be debited. When Omar is going to be debited? On purchase return. On purchase return. Omar and Mariam. Okay. Imagine now. Mariam might have already Mariam might have already purchased goods from Omar. Then the entry in the books of Omar being sales. For Omar, it's sales. So M and sales. Okay. Later on, why do I want to credit Mariam? It may be due to purchase return. Purchase return. So for Omar, it is a sales return and Mariam is credited. Only because of this reason, Omar is crediting Mariam. On crediting, credit notice issued. In the point of view of Mariam, I'm going to answer. Then it's the inverse. Okay, Omar, instead of sales, it is a purchase return. Okay, purchase return. Omar is debited, purchase return is credited. So, debited account being Omar, credited account being purchase return. So, C is the correct one. C is the correct one. Is it clear? Now, the following ledger account appeared in the books of Lay, a trader. Which statement is correct? Ambras allowed Lay $100 trade discount on 30th April. So trade here is discount. This discount is cash discount only. In case of trade discount, will not come at all. So A is not correct one. Ambras owed Lay 2100 on 1st April. Ambras. Okay. Owed Lay. Okay. We are going to prepare only in the books of Lay. Why Lay is owing? Because of the purchases only. Okay. Purchases being this much. Ambras account. Okay. Ambras owed. So the initial balance being 2100. Okay. 2100. In the books of Lee. If the balance appears in the credit side, what does it mean? Lay is liable to pay. It's a liability. It's a liability. Ambras is a liability account or trade payables account. Trade payables means Lay has to pay to Ambras. Here, Ambras owed to Lay means Ambras has to pay to Lay. That's how the statement is given. No, it's totally different, so it's not correct one. Lay owed Ambras 2,950 on 30th April. Okay. Lay owes. Yeah, of course, this is Lay to Ambras only in the beginning, in the end. So C is the correct answer. C is the correct answer. Lay's net purchases from umbrellas in April being 2,900 net purchases. No, purchase being 3,000 and purchase return being 150, net being 2,850. So also not correct. So C is the correct answer here. Is that clear? Now 42nd. Fatima required additional finance for her business and borrowed funds from Ali. This was deposited into the business bank account. How should Fatima record? So here the amount, the entry being bank and Ali is credit. Account debited being the bank, so these two correct. And account to be credited being Ali loan payable. It's not trade payables. Trade payable is due to any purchases. You purchased but you have not paid this. The due means that come under trade payable. So it's not trade payables. So A is the correct answer. A is the correct answer. Right. On 1st March, a business owed its supplier 9,500. During March, the following transaction took place. Okay, so 9,500. Supposed to pay. Goods purchased on credit. Again, the payment to them is increasing. Goods returned to supplier. Okay. So it's a returning minus. Check paid to supplier minus. Cash discount received also minus. These three will be deductible after adding this one. So the total being 9,200 and 10,300. 10,300 is the final value. C is the correct answer. Next. Which action is an example of double entry bookkeeping? Double entry means every transaction will have equivalent debit and credit. Making a journal entry to record correction of an error made in ledger. No, it's not correction. It's every debit will have equivalent credit. Making entries in the sales journal and sales ledger to record the goods sold on credit. No, it is also be not correct. Okay. Recording a check paid to trade payables in a cash book and purchases ledger. Okay. Recording a check paid to trade payables in cash book and purchases ledger. Okay. Yeah, of course. The check payment to the trade payables. What's the entry for this? Okay. The party account. Okay. The party account and bank account. So bank account will come in the cash book, correct. Party is nothing but purchases ledger account. Also be correct. Okay. So C is the correct one. C is the correct one. Purchases ledger is nothing but trade payables. This is a collection of trade payables. So we are making the payment to the party, trade payables, right? Recording purchases goods on credit and purchases journal and purchases account. Okay. No. Purchases journal is subsidiary books. From there, purchase account will be transferred. This is not double entry bookkeeping. You need to have a debit equivalent to the credit. Here we have the debit and credit parallelly. The party account is nothing but purchase ledger and bank is the cash book. In case of recording purchases of goods on credit, the journal entry being purchases and creditors, trade payables. But they have shown, you have to show only in the purchases journal and purchase account. We are talking about only this part. This is not talked, means explained here. So this is not correct answer. Is that clear? So you pass the entry, both the debit and credit should be affected. Only then such answer will be correct one. So here C is the correct one. Which account is not kept in the nominal ledger? Sales and purchases will not be posted in the nominal ledger. Okay. So definitely what happens here? And cash also. Predominantly cash. Cash is the correct one. Cash is the correct one. So you can make note of it. Cash will not be a part of nominal ledger. Now, a trader Karim purchases new vehicle by check. He will use this vehicle to deliver goods to his customers. How should Karim record this transaction in his book? Trader Karim purchases a new vehicle by check. Then vehicle bank is the correct one. He will use the vehicle to deliver the goods for his customers. Okay, no issues. Okay, how should Karim record this transaction in the books? Vehicle should be Debit and bank should be credit is the correct one. So C is the correct one. 49. Following ledger account was in Mina's sales ledger. Mina's sales ledger. The following ledger account was in Mina's sales ledger. Right. This is what about the sales ledger. Which statement about the balance on 1st February in Mina's book of account is correct? Okay. This one, balance brought on. So, this is the amount recoverable from Mina. Okay. Amount recoverable from Mina. Was in Mina sales, right? Recoverable for Mina. Okay. Amount is recoverable from some third party by Mina. Definitely, if the balance in the debit side, what does it mean? Asset. So it is an asset is correct. Okay. Okay. 1st February. Which statement about the balance on 1st February? No. I just explained. Okay. Following ledger account was in Mina's sales ledger. Mina's sales ledger. Usually what we do, if the balance appears in the debit side being the asset, if the balance appears in the debit side, then it is an asset. But in case of ledger accounts was in Mina sales ledger, the asset becomes liabilities like. Asset becomes liabilities like. So it is a liability is the correct answer. It is a liability is the correct answer. I just verify this and let you know later on. Okay. Now you'll just understand this way. Okay. Okay. So I stuck here. The question is correct. Okay. This will be your asset. If the value in the debit side, asset. But here, February 1, no, this value appears in the credit side. So if it appears in the credit side, it's a liability. Okay, now just I verified and confirmed. C is the correct answer. Is that clear? If the balance is in the credit side, then it's a liability. Okay. Balance brought down. Okay. Balance brought down in the credit side means liability. So opening there is an asset and closing value being the liabilities. 48. A check received from Kate, a credit customer, was dishonored. How was dishonored check written? So while receiving bank to Kate and on dishonor, you have to reverse this. Kate to bank. Kate to bank. So B is the correct one. Okay, similar illustration already we discussed. How would a business owner know that he is receiving return on his investment? Return on his investment. Okay. Now, what's the um, analysis ratio for this? Profit for the year divided by capital employed. So, this profit will be identified from the income statement. C is the correct one. His income statement shows a profit for the year. If the profit is negative, then there is no return. So return on investment is nothing but profit by capital employed. So you can verify whether there is a profit or not by preparing income statement. It's not all about drawings. It's not about the bank account is no longer overdrawn. No, working capital also be not a matter. Only the profit for the investment. So investment and return being the profit. Okay. That profit is identified by preparing income statement. What is the correct order of processing accounting data using the double entry system? First, business document, from their journal, ledger, trial balance. Directly we got the answer. Journal business document, no. Ledger business document, no. And journal is last, also incorrect. Trial balance is first and the journal is last, also incorrect. So what is the correct one? A is the correct one. Is that clear? 51. Samir owns a shop. To determine his selling price, he makes up marks up his inventory by 50%. He took inventory for his own use costing $100 but did not pay for it. Now, usually markup means another 50 is added, 150. But while drawings, we have to consider only 100. We have to consider only 100. So then drawings debit 100 and purchases credit 100. We never bother about 150. Clear? In April, Meena sent Ralph invoices $170, $240, and $125 and a credit note rupees 63. Okay. So while invoice sending, so Ralph is going to be debited to whatever it may be, maybe predominantly sales. And credit note means I am going to credit his name because of some sales return or whatever it may be. These three are for sales. And credit note, while selling, Ralph is debited. On returning, you have to credit. While crediting, we send a note for that. It's called credit note. Okay. In the same month, Ralph sent Meena a debit note for 70. Ralph sent a debit note 70 and check for rupees 107. So from here, a debit note means some defect is there. So Ralph sends, sir, I will subtract $70 because of a defective item and have check rupees 107. There was a no opening balance of Meena. Now what happens? These three are the amount recoverable from Ralph by Meena. And this is as per the Meena herself, she deducts this amount. As per here, Ralph, this amount should also be subtracted. So 170, 240, 125, all are for invoice for sales. Invoice for sales means debit. And credit for some return and cash received being 107. And debit note of Ralph is equal to the credit note of Meena. So that will also be subtracted. So you have to subtract the 3. Come on, tell me. The total of 3 being yeah 170 170 plus 240 plus 125 535 and you have to subtract 240 and 295. So A is the correct answer. Is that clear? This topic is all about document topic. Okay. Now we'll move on to the next one. Sahil took goods from business for his own use. These goods had cost 60 and selling price 100. We never bother about the selling price. Which entry was made in the drawings account? So drawings account will be shown at 60 only. Drawings is also be debited. Okay. So debit drawings with 60 is the correct one. 54. The following account appeared in the ledger of Eli. Okay. Jacob account. Which statement is correct? On June 1, Eli was owed to 20 to Jacob. No, it is an asset. So Jacob is owed to Ali and for Ali it's an asset. So A is incorrect. Okay, once again. In the ledger of Eli, Jacob account, it's an asset. Yeah, Eli was owed to 20 by Jacob. So Jacob is owed to Eli. Then it is correct. Okay, this is correct only. By oversight, I missed that answer. Now we'll be able to understand this. Clear? Next, second. Jamil financial year ends on 31st December. On 1st January 2021, he brought down a debit balance on his stationery account. What does this balance represent? So it's an inventory only. I think this is the repetition of the earlier illustration. Okay, we have seen no inventory account, stationery account. Stationery account balance is usually inventory. Which statements about bookkeeping and accounting are correct? Already we have studied the similar illustrations. Accounting is performed periodically rather than daily. Correct. And accounting uses information kept in the books of bookkeeping records. Accounting uses information kept in bookkeeping records. Yeah, this one also correct. Whatever the bookkeeping records is uh, giving, accounts is going to be prepared. Subsequent statements are prepared. Bookkeeping includes presentation of financial statements. Incorrect. Bookkeeping involves a recording of a financial transaction. Bookkeeping involves recording of financial transaction. No. Yeah, of course. Transactions are going to be recorded in bookkeeping. This one also correct. So 1, 2, 4 correct. So A is the correct one. A is the correct one. Is that clear? Okay. We'll move on to the next one. One second. Now, next. 57. Amarjit had the following closing balances in his books at the end of the year. What was Amarjit's capital at the end of the year? So you have to add all the assets and subtract the liabilities. Non-current assets, trade receivables, bank overdraft and other payables are being the liabilities. So add these two 36,000 and subtract the liability 3,600 and then ultimate value being 32,400. C is the correct one. C is the correct one. Which task will not be performed by the bookkeeper? Accounting ratios not by bookkeeper, and purchase journal, sales journal and petty cash books are prepared by the bookkeeper. So A is the correct answer here. And 59, Sami bought goods on credit and later returned some of these goods. How would he record the returns in his books of account? Okay, Sami bought, so it's a purchase return. So while purchasing, the entry being purchases to supplier, on returning supplier to purchase return is the correct one. So account debited being the supplier account, account credited being the purchase return. So D is the correct answer. Is that clear? And 60th one. Shula's financial year ends on 31st March and 1st April 2024. There was a credit balance of $100 on Yashmin's account in Shula's purchases ledger. There was a credit balance. Okay. So in Yashmin's account, credit balance means it appears in the credit side. Balance brought down 100. Okay. Now, what does it mean? Shula had paid $100 to Yashmin. No. Okay. So here for this is being the liabilities appearing which side? Credit side. Means Shula has to pay Yashmin this much amount. So Shula owed $100 to Yashmin is the correct one. See, is that clear? And 61. Okay. An account in Peter's book of account was as follows. Rami in Peter's books. Rami. Initially 400 rupees. What does it mean? Peter owes Rami to this much in the very beginning, and the payment is made 380 immediately after a discount. Peter received a discount for buying in bulk. No, it's not bulk buying, it's a cash discount. Peter received a discount for paying early. This may be correct one. Rami received a discount for buying in bulk. No, it's not a discount for the Rami. Rami received a discount for paying early. No. For Peter only the payment is made, and that too 20 rupees is enjoyed by Peter while making the payment to Rami. It's a benefit for Rami only. Sorry, Peter only. So B is the correct one. Okay. Which statement is correct? The income statement is part of double entry system and shows a trader's financial performance. Yes, definitely. Income statement. It's not financial position, it's a performance. When you calculate the profit, it's a performance, right? When you are finding what is the capital and assets balance, then it's called financial position statement. You have to understand the difference between these two. Income statement is part of double entry system and shows the trader's financial position. Okay. Financial position means balance sheet, assets and liabilities. No. It explains about the performance, whether there is a profit or loss. This one is correct, this one is not correct. The statement of financial position is part of double entry system and shows assets and liabilities only. The statement of financial position is a part of double entry system and shows assets and liabilities. Financial position shows assets, liabilities, and capital also. So it is also incorrect. The statement of financial position is part of double entry system and shows owner's capital only. No. C and D together means okay, but only assets and liabilities, only owner's equity is not correct. So A is the chosen one here, correct one also. Okay. The double entry system of bookkeeping consisted of processing accounting data in a certain order. How? Already we have studied, no? Business document, and then book of prime entry and ledger trial balance. That's the correct one. Business document, ledger trial balance. No. Book of prime entry will come here. So A is the correct one. Is that clear? 64. Dave supplies goods to Peter on credit. On 1st April, Peter owed Dave $440. Okay. Dave supplies goods to Peter. Peter owed Dave 440. During the month April, Dave processed the following documents. Okay. Invoice issued. Already 440. Peter owed. And Dave supplied further 360 should be addable. Check received after Peter deducted 11 rupees for discount should be subtracted, and discount should also be subtracted. And debit note received. Debit note received means we have found some items maybe not good enough for substandard items. So Peter returned that good with a debit note, and credit note issued means we offer a discount that will be subtracted. So you have to add these two and subtract these values. Okay. 440 plus 360, 800 and 100. So 260 will be the ultimate value. 260 will be the ultimate value. Clear? So you should be careful to deduct this 11 also. You may miss to deduct. Okay. And 65th. Alisha entered. Okay. The credit notes she received in March in the correct returns journal. Okay. So entered credit notes she received in March in the correct returns journal. Okay. Now, when she is able to get the credit note on sales, the entry being supplier to supplier and sales, supplier debit and sales is credit. If the supplier returns the goods, we have to credit. Okay. So sales return and supplier. Is that clear? See, in this case, what happened on sales return? We issue credit note. We issue what? Credit note. Supplier issues debit note. Okay. Supplier issues debit note. Okay. I'll just make it correct. Okay. Not supplier. Sales, then it is being customer. Customer. So while selling, we debit. On returning, we issue credit note and supplier issues. Sorry, the customer issues debit note. But credit note received, then when it is possible to receive the credit note? Okay, in a reverse case, purchases to supplier, and on return, supplier to supplier debit and purchase return is credit. In this case, I issue debit note and my supplier issues credit note. Here we are receiving the credit note. We are receiving credit note means this will be correct one. So it's all about purchase return. This will be the correct one. How was the total of this journal recorded in the ledger at the end of the month? End of March. Okay. So credit purchase returns account is correct one. So A is the correct one. Not sales return, not debit purchase return, because purchase return should be credited. Debit sales return also be incorrect. So A is the correct one. Think whether the debit note or credit note issued by us or by the party. By us or by the party. You have to be double cautious with that. Is that clear? Hope you'll be now able to understand this part.